Good day, everybody. Welcome back to the Everyday Growth Advisors YouTube channel. Just wanted to make a quick video here to explain, my trade on CCIV and what I intend to do with this setup here. Explain how I got myself into the situation where I'm going to end up getting 100 shares close to free, and kind of give you guys the lowdown. I actually made an initial video, and now I had to make a second one because after hours, CCIV is down quite a bit, about 30%, down to about a $40 level. The date today is the 23rd of February. And so I think it's good that I remake the video so that you guys can get a good idea, including what I want to do now that the stock has sold off irrationally. So first of all, let's go through a little bit on what has happened and why I wanted to get into this trade first of all, and a little bit of the thesis behind this. So the idea of investing in this company was pretty simple. This is a SPAC company that was going to merge with Lucid Motors. Okay. And for those of you that don't know already, Lucid Motors is kind of like touted to be a competitor towards Tesla. Okay. So what I was hoping was that this SPAC would rally as a competitor towards Tesla. Okay. And the first time that I started buying and flipping these shares was at the $17 level. I flipped these shares, I think 100 shares here, and then another 100 shares I flipped from here to here, little swings that I took. Then I started to see some institutional buying, and that's when I realized that maybe this has more credibility to this than there seems. So I intended to buy 100 shares long, and I wanted to buy 100 shares long, I think somewhere around here in this region. Okay. And I think at this point there were insane amounts of money being dumped into puts. So there was a member on our Discord community, which, by the way, if you don't know, we have a Everyday Growth Advisors Discord community. You can go to our website, learncompoundgrow.com, or I'm going to put the link in the bio down below in the description so that you guys can go visit it. And one of our members, he pointed out that premiums were trading at a very high IV, which is the implied volatility of the option chain. I think, in fact, the implied volatility of that option chain was something like 270+%. Okay, and at that time, I realized that it would be a really great idea to sell some in-the-money puts instead, considering I was expecting the price to rocket to the upside. Okay, so what I did was I did two things. I wanted to allocate about $11,000 into this position, and what I ended up doing was taking two positions. Sorry, three altogether. So these are the positions that I ended up taking. Okay. I sold two $30 puts, and then I also sold a $50 put. So the $50 put is in the money, and the $30 put at that time was also in the money. But I knew it would probably go above $30, so I didn't mind owning the $30 put. Okay. So out of this, I needed to calculate these scenarios. So first of all, right before I even get into calculating scenarios, let me just kind of explain a little bit about how selling puts works and how selling calls work, something like that. This is part of the wheel cycle. We teach this during the beginner's course that I mentor, and we have a enrollment that is open now. If you want to check it out, I'll also leave the link to that in the description. A course where we'll be teaching how to do this and other things as well. You can go check it out down below. So let's just get to it a little easier. So let's say, you want to own this stock, and let's assume that all of this didn't happen, right? Let's assume all of this didn't happen. Let's assume that all you see is something like this, right? And, you don't know that the stock is about to rip. But, you want to own the stock, you want to be bullish, but you don't want to be bullish by buying the stock outright. Well, you can sell puts against your stock, okay? Now, the best time to sell puts is when options premiums are extremely high, okay? And so the main idea here is to look for premiums that are extremely overbought. Therefore, when this was trading at $30, $26, this is when I sold the puts. By the way, the people were overpaying for puts, and I managed to get some really juicy premiums. So when you sell a put, what this means is that you are bullish. Okay, what does selling a put mean? You're selling a put to somebody else who is bearish. They think the stock is going to come down, and you think the stock is going to bounce over here. When you sell the put, you are hoping that the stock does not go below your strike. Okay, if it does, then you are assigned 100 shares long at the strike price. Okay, that's what happens when you sell a put. You'll be assigned 100 shares long. If you sell a call, which is the upside now, right? If you sell a call, let's say at $48, now you are assigned 100 shares short instead. Okay, so that's the difference between buying and selling options. One, you have the right to purchase. One, you're obligated. In this scenario, you're obligated if the option expires in the money. Okay, so just to kind of get you guys a little bit on the same wavelength there. So what happened here was I had 3 outcomes that I calculated in my head. Okay, and I went through this during our live trading session. Everybody kind of understood what I was doing then, and we all kind of agreed collectively that it was a really great deal. So there's literally 3 outcomes. Okay, there are always 3 outcomes: the first outcome, second outcome, and third outcome. Okay, so let's go through the first one. Outcome number 1 is that CCIV moons to above $50. Okay, this means that both options, both the $30 put and the $50 put, are now out the money. Okay, and they expire worthless. Okay, so let's go have a look at what happened here. So I received a total of, from the $50 put, I received $26 in premium, and from the $30 put, I received $10.50 times 2. Okay, so 26 plus 10.50 times 2. This is a total of $47, which is roughly $4,700. Okay, and how much is the collateral that I used for this? I used a total of 11,000. Okay, you can see it right here, the buying power effect, 11,000. Okay, really good return on investment, right? Of 42% return on investment. Okay, so the first scenario is I receive 4,700 on 11,000. Okay, and that's roughly a 40+% return on investment within a 1-month period of holding, and I was okay with that. Okay, that's the first scenario. The second scenario is CCIV is between 30 and 50. Okay, it's above 30 and it's below 50. Okay, this is where CCIV is, and this is the scenario that I have right now if CCIV prices hold to where it is right now at $40. Okay, now in this scenario, what happens is my 30 puts, they expire worthless, giving me a total of $21 in premium. Sorry, that should be, let's see, it's $21. And on this side, I already received $26 in premium, right? That means I still receive the same $47 in premium, right? But what happens is what happens differently here? I get assigned 100 shares long at $50. Why? Because the $50 put is in the money. This is actually the scenario that I want, because I want to own these shares long term. Okay, but here's the beauty of this scenario. I am going to get these 100 shares of CCIV at $50 for $3. Why? Because I'm going to purchase it for $5,000, but I've already received $4,700 in premium. Therefore, I'm going to receive it at $3 per share, which means I'm only paying $300 for 100 shares in this scenario. Okay, this is scenario number 2. Beautiful, isn't it? This is the power of selling premiums when people are overpaying. Okay, now the third scenario. Also a acceptable scenario is when both puts are in the money. Okay? This means that I am assigned 300 shares long at a mix of $30 and $50, right? I'll be assigned 200 shares at $30 and then 100 shares at $50, okay? And the cost basis of this would still be $11,000, right? And how much I'll actually be paying is minus $4,700 because I received that in premium. So I'm only paying $6,300, right? Okay. And if I take $6,300 and divide it by the 300 shares that I have, that gives me a cost average of $21 per share. Still a beautiful, beautiful setup. I do not mind owning 300 shares at $21. So all three scenarios are beautiful. By the way, how am I going to end up getting these shares for free now? If CCIV stays below 50 and above 30, okay, which is a scenario right now, which I really want, scenario number 2, right? I'm going to get these shares at how much? $300, right? For 100 shares, right? We just did this calculation a couple minutes ago. Now, what I'll do is when I receive these 100 shares is sell a covered call. And I'm pretty sure that I'll be able to get $3 in premium for a out the money covered call. Maybe a weekly covered call. And then I'll have all 100 shares for free, pretty much at that point, okay? So this is a strategy that I am using. Now, for today, just covering what's happening right now, okay? So the stock has dropped, I think, to $40, almost 30% overnight. Why? Because people started selling on the news, okay? This is what we call buy the rumor, sell the news. This is a common stock market occurrence. Basically, investors who were playing the run-up and not serious investors, long-term investors, they took their chips and they left. This gives an even better scenario for those of us that want to pick up more shares at a discount, okay? So what I will intend to do today, hopefully, is close out my sold puts for a profit, and if premiums are crazy enough, I may consider rolling these out into an even more bigger position. Okay, that's what I intend to do. I don't know what I'll be doing. I can't decide because the option chain is not open. But I will be more than likely deciding what to do based on what the premiums will be in the morning. Okay, but I wanted to create this short little video to explain to you guys how I ended up getting these shares, or how I will end up getting these shares for free. And I hope that this is educational to some point, to helping you guys understand the power of selling premium and options rather than always relying on buying, right? You need to be able to do both. You need to be able to understand the fundamentals behind this, and the reason why the hype happened and all of that. Of course, I did my due diligence. I didn't just take this on a whim. I saw all the material about the Saudi investments in the background. I saw, Klein, who was the person who was backing the deal, and all the other things that were involved in this deal to go through. And now the merger has been confirmed. So therefore, we know that this stock now has the capability. Another thing that was weighing on my head when I took this trade was the fact that people will be having FOMO from Tesla. People who didn't get into the Tesla run may take this stock instead as a possible opportunity to cash in on a lost age of Tesla. So I wanted to create this video a little bit just to get you guys understanding on how this happened. And I can't wait for the market to open tomorrow. Many people will be scared, but I love this scenario because either way I win. It doesn't matter what way the market goes, I win. And that's a beautiful situation to be in. Of course, I'm not saying this happens every single time, but you got to be smart with the way that you analyze the situations instead of just relying on buying naked options, buying calls, buying puts. There are more creative ways to manage your portfolio and your wealth than just these specific ways, okay? So I leave you with that. If you enjoyed this video, leave a comment. Tell me what else you want to see, and make sure you like and subscribe. Truly helps me a lot to make the EGA tribe bigger. We do have mentorship courses that we offer. If you're interested, go visit learncompoundgrow.com. I'll put the links in the description below, and I wish you all a great day. Have a good one, guys. Peace. I love you all. Take care. Bye-bye.